Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast and analysis for the week starting of 6 to 11 of October 2019. So first of all, thank you very much for your time watching this video. I hope, as always, that you find it helpful, educational and useful for your trading during the week. If that's so, please show your support back at the work I do for you. Hit the like button below the video and leave your feedback in the comment section. This video is completely free and open for the community, so share with anyone who you want. The idea of this video is educational, to give briefly interesting trading opportunities and ideas the way I see them with my techniques, and hopefully to provide several opportunities to make good profits in trading. So as always, on Monday I will be publishing my text version for the weekly forecast. So just come back to the blog vladimirribakov.com or back to the video on Monday, and below in the description and in the comments you would find a direct link to the text version. So right now we will review the previous week analysis and forecast. We will see what worked for us and what failed, what is still relevant, what is still developing, and we will discuss about new opportunities as they come. So the first one would be the Aussie versus the Kiwi. Our idea with this pair is to look for dips and buys. Basically wanted to see the 4-hour chart forming sort of a range or any structure pattern, making one more drop, building up a divergence by itself, and then providing the rally. And if it would not make the structural pattern and a new low, then we want to see the trend changing to the upside by making higher highs, higher lows, and then looking to buy retraces. So let's take a look on this pair. What did it do for us? Provided us some sort of, well, in that case it wasn't a pattern, in that case it was two waves correction, which is one of the corrective ways. And then we got the low as we wanted to see. The problem with that low is, however, that there is no divergence between the ending lows. Therefore, the structure right now, even though that the daily does look like a bullish hidden divergence, is not yet verified by the 4-hour chart, and there is a good chance that we might see it going deeper. But due to the fact that the daily is already bullish hidden divergence, one of the probabilities that the market will behave, it's that it will start to make some sort of very annoying price movement within a more narrow range before any trend continuation. So the way I see that right now, we have been enjoying from the rally for a few weeks in a row, all this rally, of course, for all those of you who follow. And then we enjoy the short-term corrections. Now the picture has to rebuild itself, and I do not consider the Aussie versus the Kiwi as an interesting opportunity for the current moment I record the video. Maybe during the week it would get better, and we will discuss about it, of course, in the live trading rooms. But I definitely do not think, as for now, it's interesting. Therefore, moving it to neutral. The next one on our list was the dollar versus the yen, and there were two critical levels we wanted to see before the price starts to move down. One of them was the top for possibility of double top with the bearish divergence, and the second one, if this area would be broken, then slightly above the 200 moving average, closer to the area of 109.110, and then the move down. What happened with the dollar yen in that case was double top. We are blocked here during the week. We pushed during the beginning of the week. We pushed it higher, created a double top. Divergence was done, and now, boom. So the big question right now with this pair is, okay, so what's next, right? According to the weekly cycle, there is still possibility for deeper correction, but the daily is missing its classical bullish structure. So there is a very, very, very serious question. So what's going to happen next? And the way I see that at the moment, the better chance, according to the price action, is that we would see here some attempt to create this second leg correction, push it to the down again to provide some good bullish divergence, and then we would have to see how the price would react. If we go below a certain level of 61.8 here, that would simply be in straight movement, of course. It would simply be a bearish call. If we hold here and provide the two waves and hold and breaking, there is a good chance it all becomes as sort of triple double structure and further continuation. So there is a very, very good chance that the dollar yen would be busy this week with fighting to create the next direction. There is one clear thing right now. We are in a very, very important area here, as you can see. It's also supportive area. It's also inner zone here with a hold, and it's also structural zone based on the lower time frame. So if we hold here and provide these two waves, that might be the beginning of the rally. If we continue and break through, there is a good chance we are heading all the way lower. I mean, continue and break through the 61.8 Fibonacci retrace. Okay, so dollar yen is very, very tricky in the current price action. One of the possibilities, one of the maybe reasons why it might continue lower rather than retracing to the upside is the fact that the current, as for today, the current buyers stands on around 85%, while 15-20% are selling. And as you know, and it's not a secret, the retail trading is built in this way that the majority jump in too early. So the buyers that currently are busy with buying might simply be trying to do it very early. It's of course not any call to action or any mandatory, but it's important to remember these little things. So previous week I had a very interesting question in the video, and I asked you guys, what do you think about dollar yen? Some of you said in the comments going down hard. Some said going first of all to 110. I'm very interested to hear from you guys. What do you think about it right now? And let me know about it in the comment section. And as a thank you, I continue the special offer that for those who will leave the comments below, you will gain yourself a chance to get a free access to Traders Academy Club for a full trading month. This is also a great opportunity to congratulate a previous week winner user with the nickname 618. Please follow the message I left you in the previous week. Okay, and this is a call to action for you guys to leave your comments for this video. Do that right below the video. Let me know what do you think about, well, the video and dollar yen and any other of the pairs that you find interesting, and more to come. And earn yourself a chance to get a free Trading Academy Club access for a full month. So back to the review of the previous week. We can see that the dollar yen holded the double wave, now structuring a very interesting well, pattern, I would say, for if it breaks the 61.8 for trend continuation, and alternatively if it holds this massive area I just showed, get ready for the rallies. Euro versus the pound, the idea was buy retraces, and here we are. We got, let me open that, we got the retraces during the week, we got the rally. The rallies still do not take us towards the most important area, and honestly right now the pair has all the reasons to be suspicious. As you can see, the bearish divergence develops on the MACD, right? The daily, as you can see, already resisting this massive area here, and you can see the spikes of weakness. The bulls are getting weaker, they don't manage to hold their positions. So the way I see that, there is a good chance that rallies would turn to be fake. So if we get new rallies, it's an opportunity to start looking for sells. So this area, as I marked it not once, if we get closer with this divergence developing, I'll be looking for the sales opportunities. Another way to start loading maybe the sell idea is if we build lower highs, lower low structure, and then sell the rallies. Could be a very interesting thing to do for the euro pound. And the reason to do so, by the way, still derives from the fact that the weekly is under corrective mode by making this extreme. So the expectations to see two waves, clear two waves as a correction. That's why sell the rallies would be the main plan. And the way it looks right now, if we get the rallies, I would be looking to sell for sell opportunities. The slow motion to the upside is a suspicious sign, and basically clear sign that the buyers are weak, as simple as that. So that's the euro versus the pound for us. Aussie versus the franc. Our idea, as long as we are holding these levels, we are after the buys. One of the scenarios we were following was three waves to the upside, retrace and continuation. The other one was deeper correction down, break of the trend line and buys. So let's take a look on the Aussie franc, which provides us the second opportunity, the second structure. Two waves, bullish divergence, trend line breakout. Now Australian versus the franc was the last video I uploaded for the day trading opportunity. Right now, on the top right corner of the video, you would be able to get a direct link to this video. For all those of you who don't know what I'm talking about, as a follower of my channel, you get day trading ideas on Tuesday, Wednesday and Thursday. Well, assuming the market provides something for us, right? Aussie franc was the previous week. If you missed it, once again, you can watch it in the channel. And if you are new to the channel, I would like to invite you to subscribe. Just follow the subscribe button below, and remember to enable the ring notification so you know when a new video is available for you. So Aussie franc broke the trend line and also creating a very interesting structure of a false breakout, of a bend to bend movement, straight move from one bend to the opposite. And as long as that case holds, I think that the Aussie franc is gaining its bullish structure. Watching on the daily candle pattern in that case doesn't really help us too much. We're still stuck within one range, so I definitely would like to see that breaking through. And because if it will not gain this momentum, the fact that all this attempt is holding could be just an attempt to create one more fake low and then move to the upside. So the way to approach that would be, first of all, with aggressive trading, which means smaller risks. We got the structure of the higher highs, higher lows here on the 1 hour chart, confirms the technical preparation, let's say, for the rallies. If we create two waves correction here or a range, we can get a breakout, let's say like this, a breakout and a beautiful rally. Of course, we can face here some sort of a range, another breakout and continuation. As per the weekly, the last divergence is yet bullish. As per the daily, the last divergence was bearish, but facing the corrective cycle in the two waves, meaning getting ready for possible corrective cycle of the weekly. And that's pretty much why I am after the buys on this pair. So once again, I want to remind you, let me know what you think about it in the comments below the video. And as a thank you, gain yourself a chance to earn a free access to Traders Academy Club for a full trading month. The next one on the list for us was the, where we are here, pound Kiwi. And the view was basically the correction. So we got the correction, then we were waiting to see clearer structures, and here we are, the higher highs, higher low structure from the daily, now building up the two waves correction and a bullish hidden divergence. So it's time to go to the 4 hour chart and mark the levels. This was the first level for us, right? And basically that's the critical zones we have here, here, and a massive one around the 161.8. From these areas, we might be looking for the buy evidences, bullish signs, bullish turnarounds, like higher highs, higher lows to start and form. And for more conservative, break of the trend line would be the call to action. Personally, due to the way that the structure is going and building, I think that the closer we get to the 100 or ideally 161.8, the stronger the reaction of the pair would be. A very interesting fact on this pair is that the amount of the sellers is a bit bigger than the buyers, and that's another reason why I think we are running to the end of this correction down, and the bullish reaction is about to begin. A quick observation on the statistical numbers, statistical days would teach us that we are approaching to critical zone for buys, starting from the 9th of the month and going through the next days. The pressure is getting stronger for the buys. We also see supportive zones here, so the statistics also show us that the bullish pressure is about to get in with high probability. The statistical numbers I take and use directly from my Forex crystal ball system. So that's for the pound versus the Kiwi, which starts to be super interesting from my point of view. Dollar versus the Franc, wanted to see the buys the closer we get to the bottom of this range. And this pair delivered. It was a beautiful shot to the upside. Let's mark it here. even though it did not went really too deeper than it was in the corrective phase here, but this pair delivered a beautiful rally for us. And the question is, what's next? Now what's next, you can see right now on the price action, all these zigzags. Obviously it's getting less clearer. One of the reasons it is like that is because previous week data coming out of the US with terrible ISM and the manufacturing numbers from one side, and from the other side great job market from the US started to create a lot of speculations around, okay, so what's next with the rate cut decisions. Red, how Russian accent it is for me. So the rate cut decisions increasing. The chances that the Fed will go and cut again are now started to be presented in the price action, and that's why the dollar reacts in the negative side. What do we have from the weekly? Still bullish, while the daily is showing us rounding divergence here and lots of spike around this massive clearance area and the psychological zone of 1. So I would say that as long as this area survives, I would be expecting the dollar franc, to deliver some short-term corrections to the downside. We can see that the trend line is breaking here. We are creating here lower highs, lower lows on the lower time frame. Let me just show it here. We start to create the structure. A false break came in play. A convergence come in play. Right now we are continuing to develop that. So from my point of view and the way I see that, I would be looking for sell opportunities for the dollar franc, and I would expect a corrective mode. Now correction could be tricky. Correction could be 2 waves, and correction could be just some sort of a range. These are other way around. During the week, I think that looking for sell opportunities on the move up, on any reactions to the upside, should be the right thing to do. Add to that the fact that, if I remember correct, it was around 60% of the traders right now are busy with buys. This fact would teach us that likely we would see some bearish reactions. And add to that the fact that the dollar franc also statistically great for the top around the 5th. We can see that this as closer as we got to the 5th, which is weekend, right? So of course the days before are the ones that count. The closer we got there, the stronger the pressure becomes, and there is a good chance we are going to play here in the corrective mode. So as long as the top holds, personally I think, despite the fact that the price is zigzagging right now, the moves might start to be corrective for this pair. Next one, pound versus the franc. We cashed out and game over for this pair since the last week. Still waiting for good opportunities. And the euro versus the Kiwi. We wanted to see a range on a daily cycle or 2 waves correction. And the euro Kiwi, here we are delivering right now the second wave of correction, and I still expect it to play within this range, and the closer we get here, the stronger the pressure would be to the upside later on. So this is what's currently building up, the 2 waves and the divergence, and once we're gonna hit it, it will be good time to start looking for reactions and the buys. Meanwhile, on the shorter term, the way it develops, we might see the price pushing slightly lower. Of course, you can see clear structure of the lower highs, lower lows on this pair. So on the short term, sell the rallies could be the case. But once we achieve this zone, right, with the bullish evidences, it's a great time for us to switch the corrective mode to the buys. Another fact here is again the crowd positions, which there are many websites where you can find some information. And of course, COT report would be very helpful here, but you can also see that on the price clearly, right? You can also see that on the price, the way it structures and divergences come. You know that likely the retail traders are in the wrong directions. That's very simple, very logical, and happens on the majority of times. And the statistical view also will teach us here that we are heading towards great zone of days, as you can see, for the buys. That's why I believe is about to end, and this drop down about to end during the next days, during the week, and provide us the buy opportunities for the Euro Kiwi. So the next one of ours would be the CAD Yen, which we have been looking for sell opportunity. Where is that here? From the double top area, or ideally the 61.8 expansion, and then looking for the move down. CAD Yen, here we go. So the price blocks here the double top zone, never managed to create the new high level, and since then the divergence and the move down. Right now I do not see any interesting opportunity for the pair, so I think it's a great place if you got involved to look for sells. Once again, it didn't manage to deliver the 61.8, it did manage to block the double top zone and provide the sells. On the lower time frames, that's what we always want to see, right? And this is basically the place where you will want to use yourself reversal structures. In that case, as you can see, also the intraday was holding the same high, the double top. By ideal, as always, we would want to see false breakouts, then after the false breakout, trendline breakout, or for safer view, lower lows or convergences, and then retraces. And if that doesn't happen, we would like to see lower low, lower highs. Didn't happen here, so that's pretty much it with this pair. Right now, the price action tricky. I can't say I like it anymore, and therefore moving to neutral. And before we go to the commodities, some new opportunities on the list. So the first one, New Zealandian dollar, which I start to find very interesting. The fact that the weekly ticks up on the MACD, making this as a bullish divergence. Candle pattern structure teaches us here inverted hammer week ago and a bullish hammer on this week. The daily verifies the bullish view with two false breakout and bullish divergence. Most recent trendline breaks, and assuming this is the first leg of the correction, then we should see the bullish structure coming in play on the 4-hour chart. And this is where we are building up the higher highs, higher lows. One more high would be required for both to get above the most recent high of the down move and to create a bullish structure. This likely to block here with divergence. After that, we should be exposed for corrections and future buy opportunity. So Kiwi dollar would be the first one as an interesting opportunity on the list. Kiwi CAD would be my next one with the same logic exactly. We are in a false breakout of the weekly chart, quarter of the round number 08250 as a psychological level, bullish divergence, massive engulfing in play on this area after inverted hammer, a beautiful structure of daily engulfing couple of days ago, actually 3 days ago, with 2 false breakouts by itself. So it starts to look promising here. Most recent trend line is broken and the 4-hour chart starts to provide us the convergence idea. As we can see here, Bollinger Bands beautifully striking to the bullish direction, which makes me think buy retraces is the right thing to do here. Watching on the 1-hour chart, we are facing here clear higher highs, higher lows, and corrections should provide buy opportunities. So the New Zealand CAD is another one on the list. And observation of the statistics will teach us that, look at this monster, second of the month, right here, second of the month, blocked for us the move to the downside and boom, changing it to the bullish direction. So once again, the structure is there. What do we need to be careful of? The level of 61.8, Fibonacci retrace. If we suddenly go through that level, if we go directly through the 61.8, it's a warning sign, and that it will be a remove from the list. Fact for us. So New Zealandian Canadian, from my point of view, is buy retrace. Let me know, what do you think about this pair? Are you bullish? Are you bearish? Where do you see the Kiwi CAD going? Would be very interesting to hear. How do you approach to trade that, guys? This is a reminder that for all those of you who participate in the comments, as a thank you for your part, I would grant a free access for Traders Academy Club for a full trading month. Next opportunity comes from the Australian dollar, and let's see what do we have on this pair. The same bullish divergence from the weekly, still under the pressure, a bullish divergence and a false breakout on the daily time frame, bend to bend movement on a daily time frame from through the Bollingers. 4-hour chart, a completed movement in a cycle by itself with this ranging condition, false breakout on the bottom, and convergence principle in play. Most recent trend line is broken. We are gaining momentum again from one Bollinger to the opposite. This becomes the pressure place where it should lead us for corrections and for further continuations to the upside. So the 1-hour chart is the place where we would want to see the gain of the bullish structure, then retraces and looking for further buys. As always, the level of 61.8 in bullish trending structures we would want to be careful with, because if we go in one straight leg below, it is a warning sign from the market and would be a removal. So Aussie dollar is another one for us, and the statistical view also will teach us the same, that the second and the third are critical days for the reversal, and this is where we got blocked by the Australian dollar. So all the things come together in play should provide nice opportunity. Next ones are the commodities. Natural gas, we are following for the break of the trend line yet to happen. It is not yet there, right here. Well, actually, my my bad. I didn't check it since Thursday, sorry. And on Friday we got the breakout. So here we are, a very good bullish sign for the pair. Bullish divergence in play of the 2 waves correction, and the daily time frame is a bullish hidden divergence. So it's a great sign for continuation. And one thing to pay attention to here, that we might see some new low here with the divergence. It will not change the view for the bullish direction. The expectations from the natural gas to provide us bullish continuation. Gold, where we were in a bearish correction until we would complete a daily bullish divergence. This divergence is completed. Here we are. The correction finished. Bullish divergence is completed. The biggest question is what's next. And for the buys, theoretically, we need this trend line to break. However, the higher time frame still holds a massive extreme divergence. The correction down is yet small. I still think that this is ranging structure, and personally, I might be wrong here, but I might be wrong on any of the, of course, of the analysis. But the idea here is that the synchronization among the time frame is very tricky. I still think the gold should be sell the rallies. So the closer we get to the top, it should provide some sell opportunities. This daily divergence is powerful, and the reaction is happening right at the top of the falling channel. Looking on a higher time frame, we don't have too much where to go yet. So that makes me think, and again, I might be wrong here, that we should be looking like for sell the rallies with the bearish divergence. Tricky, very, very, very tricky conditions for the gold. So if you are dealing with that, do that with small risks, like an aggressive approach. That's pretty much it. That's all I see here. And the last one on the list, a new addition, is the German DAX, which holds this beautiful ranging structure with the bearish divergence yet in play. The daily holds its tops by itself, so that makes me think that the structure here should offer sell the rallies opportunities. And the way I see that on the lower time frame, that's exactly what I will be looking to do. Get this correction, get some hidden divergence in play from the massive area we have here, and look for the sell opportunities. If we cross straight above 61.8 in one leg, of course it would be a removal, because we don't want in trending conditions to cross the 61.8 levels. So that's pretty much it for the coming week. First official full week of October. I want to take the chance and to wish every one of you a very happy fall period. Thank you once again for watching the video. I hope you find the ideas interesting, useful, educational, helpful in your trading. And your support back in my work is very welcome and appreciated. Of course, just leave your feedback below in this in the comment section, and feel free to share the video with anyone who you would like to. And I invite you to our live trading rooms, which we hold in Traders Academy Club, and discuss about all the trading opportunities day after day. Thank you once again for your time. I'm Vladimir Ribakov from Traders Academy Club, and I wish you a wonderful trading week and a month.